Hello everyone and welcome to Inderes TV. After the Q2 report from Sitowise, we have published an updated report on the company, and with me to talk about the report I have our analyst Lucas. Welcome Lucas.
Thank you.
Sitowise, they released the Q2 report yesterday. How would you summarize the second quarter? How did the segments develop?
Revenue was broadly in line with our expectations, but profitability lagged. Looking at the revenue, the Swedish business continues to struggle due to the challenging market conditions with a weak construction market, and similar conditions also affected the buildings business, leading to intense price competition and overcapacity. Looking at infra and digital solutions, those business areas outperformed the rest of the group, growing organically about 8%. So that was in line with our expectations, and that's because it's more sort of stable demand in these segments, especially for services related to security, digitalization, and the green transition. Looking at the order intake, it was quite disappointing in my view. It reversed the positive trends in the last quarter, so it was down both sequentially and also year on year. So all in all, I would say that there were no sort of major signs of a recovery by looking at figures in the quarter.
In the report, you write that without sales growth, it's difficult to improve the profitability. How is the profitability looking at right now?
So the profitability, it was basically on par with the same quarter last year. And as you mentioned, of course, it's difficult to improve the profitability without sales growth. We expected that the profitability would be a bit more supported by cost savings, that they would kick in, but the effect was marginal. So it was below our expectations, and the company really need to return to organic growth in order to improve the profitability from these levels.
After the report, you're making some changes in your estimates. How come?
Yeah, exactly, and that's because the weaker Q2 report than expected, but also the order intake. It's worth having in mind the lag between order intake and revenue, and the order intake is down now in Q2, so we believe it will be difficult for the company to show a strong organic growth in H2. It will be difficult for the company to grow. So that's why we have revised down our revenue estimates in H2 and also for 2026 and 2027 a notch. So I would say that the lower revenue estimates also, of course, affects the profitability estimates, and the company needs to return to a growth pattern. And from there, they need the leverage from sales growth in order to increase the profitability.
Yeah. I think we also need to talk about that the company currently carries high leverage. How is that situation developing right now?
Yeah, so with declining profitability, the leverage goes up. So it was around the net debt to EBITDA was around 6 times at the end of Q2, and that in itself it's a high level, of course. But the company's financing agreement has maturity until mid-27, so they have time to focus on improving their profitability. So that creates a buffer, so to speak. I would say that the main challenge and the key here is really to improve the profitability, because the net debt in itself in absolute terms is not super high. So if they can improve their profitability, the leverage will go down naturally.
And to sum it up here after the Q2, what is your take on the recommendation on Sitowise?
Yeah, so due to our lower earnings estimates, the absolute valuation multiples are quite high in the short term, and also the DCF and as well as the peer valuation paints a similar picture. Due to this, combined with the continued challenging market and the prolonged recovery, we believe that the risk-reward ratio is quite weak at current levels. So we continue to wait for better entry opportunities.
I understand. Thank you for taking the time today, Lucas.
Thank you very much.
And thank you for watching this video. Don't forget, our report is available for everyone, so go check it out at inderes.se or by the link from the description here in the video. But thank you for watching.